Hello traders, and welcome back to Explain the Charts, your go-to channel for unbiased market insights. Today, July 28th, 2025, we're putting the spotlight on USDJPY, a pair that's always at the forefront of macroeconomic shifts and currency speculation. Recent news broadly indicates a strengthening US dollar, reportedly buoyed by new trade deals, which has led to gains for the USD against major global currencies. The narrative suggests that the Japanese yen continues to face inherent pressures, with reports indicating it has recently weakened towards the 148 per dollar level on Monday. This divergence in fundamental strength between the US and Japanese economies, amplified by central bank policy differences, is a key driving force. However, it's crucial to compare these broader news sentiments with the very latest price action we see on the charts. Our most current data, extending up to July 27, 2025, shows USDJPY closing around 147.778. This specific figure is noticeably below the 148.551 current rate cited in some recent headlines, suggesting either a rapid shift or a slight lag in news reporting. This discrepancy highlights the importance of combining fundamental news with meticulous technical analysis. Let's now transition to the daily chart to get a broader perspective on USDJPY's long-term trajectory and identify critical price zones. Understanding the historical context is paramount before pinpointing potential future moves. Examining the daily chart for USDJPY reveals a compelling story of trends and reversals over the past year and a half. Beginning in March 2024, the pair embarked on a significant bullish trend, characterized by a series of higher highs and higher lows. This robust uptrend propelled the price towards formidable resistance levels, culminating in peaks around the 160 to 161 mark by July 2024. The 52-week peak of 158.89 stands out as a major historical resistance, a level that buyers struggled to breach and sustain beyond. This powerful ascent was undoubtedly fueled by the very news themes we discussed earlier: a globally strong dollar, often reacting to positive U.S. economic data and strategic trade agreements. However, following these prolonged highs, we observed a notable and sharp reversal in August and September 2024. The price experienced significant declines, finding a substantial support area around the 140 to 142 region. The 139.57 level, specifically, served as a critical 52-week low, repeatedly acting as a strong floor where buying interest consistently emerged, indicating a solid demand zone. This shift suggests that while the long-term trend from early 2024 was undeniably bullish, the market ultimately found a strong ceiling, leading to more consolidative and volatile price action thereafter. Since late 2024 and into 2025, USDJPY has largely traded within a well-defined broader range, bounded by significant resistance points around 155 to 156 and crucial support levels near 140 to 142. Let's now zoom in on the more recent daily action, specifically from January 1, 2025, to our latest available candle on July 27, 2025, to pinpoint recent patterns and key levels. We can observe that the pair attempted to push higher in early 2025, initially reaching highs near 158.50 in mid-January. However, these attempts were consistently met with strong selling pressure, leading to subsequent declines, including a significant bearish move in February that pushed the price down to around 149.27. The period between March and April 2025 shows persistent volatility with a general downward bias as the price tested the lower bounds of its established trading range. A notable rebound occurred in May 2025, briefly pushing the price back towards the 148.50 area, but once again, it failed to sustain these gains, indicating overhead supply. Most recently, the price has experienced a push higher from mid-July lows, yet it continues to struggle to break convincingly above the mid-148s, reinforcing this as a current resistance point. The immediate resistance at approximately 148.50 to 149.00 remains a key hurdle for any sustained bullish momentum in the short to medium term. Conversely, strong immediate support has recently emerged around the 146.00 area, which acted as a bounce point in the last few trading days, preventing further declines. This suggests that while the overall daily trend has been sideways to slightly bearish from the 2024 highs, short-term reversals at key levels are very much in play. Transitioning to the 1-hour chart provides a more granular view of the very recent price dynamics, highlighting short-term trends and volatility. Over the past several days, from approximately July 8th to July 11th, we observed a period of consolidation where the price traded within a relatively tight range, broadly between 146.00 and 147.00. This tight oscillation on the hourly chart reflects the macro crossfire sentiment highlighted in the news, indicating a period of uncertainty as fundamental drivers pull in different directions. For active traders, these consolidation zones are crucial. A sustained break above or below them often signals the commencement of new short-term directional moves. Notice the repeated touches and bounces off the 146.00 mark, confirming its robust significance as an immediate psychological and technical support level on this time frame. Conversely, previous resistance around the 147.00 to 147.20 area frequently acts as a ceiling for price advancement, leading to profit-taking or renewed selling pressure. The hourly chart also allows us to analyze candle patterns more closely, such as periods of strong buying or selling pressure indicated by large body candles. Monitoring volume during these hourly shifts is essential. Higher volume accompanying a breakout tends to lend greater credibility and sustainability to the move, signaling strong conviction from market participants. Now let's zoom in on the 15-minute chart, capturing the most immediate and highly detailed price action from July 23rd to July 27th. This time frame is invaluable for identifying precise entry and exit points, as well as confirming short-term directional biases. We can clearly identify a short-term downtrend that dominated from July 23rd, where the price steadily declined from levels above 147.00 down to recent lows around 146.10 on July 24th. However, a distinct bullish reversal pattern emerged around July 24th, marked by candles with longer lower wicks and subsequent strong bullish closes. This aggressive buying interest at the 146.00 area initiated a swift upward surge. The price then rallied dynamically, establishing a clear short-term uptrend that pushed it decisively back towards the 147.778 level by the very end of July 27th. This rapid upward momentum unequivocally indicates strong buying interest and absorption of previous selling pressure at the lower 146.00 levels, suggesting a potential short-term bottom. For intraday and swing traders, the zone from 146.00 to 146.20 now serves as a critical immediate support area to watch for retests. On the upside, the recent high of 147.778 becomes an immediate overhead resistance. A decisive break and hold above this level could very well signal further short-term gains towards 148.00 and beyond. The swift rebound seen on this chart from July 24th confirms a robust short-term reversal from the bearish sentiment that prevailed earlier in the week. To summarize our in-depth analysis for USDJPY, the pair is currently trading around the 147.778 mark based on our latest data. In the short term, immediate strong support lies near 146.00, a level that has recently proven its resilience by triggering a significant bounce. A decisive break below 146.00 would be a bearish signal, likely opening the path towards the more substantial long-term support at 142.00, which has historically attracted strong buying interest. On the resistance side, The 148.50 to 149.00 area presents the immediate and most crucial overhead challenge for bullish advancement, a zone that has repeatedly capped previous rallies. Should this immediate resistance be overcome, subsequent key levels to watch include 152.00, representing a mid-range resistance from late 2024, and the formidable 155.00 to 156.00 zone, which would require significant market conviction to breach. For a short-term bullish outlook to solidify, we would ideally need to see a convincing break and sustained hold above 148.50, potentially pushing towards 149.00. With approximately a 65% likelihood if supported by positive U.S. economic surprises or continued hawkish Fed rhetoric. Conversely, a short-term bearish scenario, with about a 35% likelihood, would involve a clear breakdown below 146.00, likely triggered by any hints of a less aggressive Fed stance or unexpected weakness in upcoming U.S. economic reports. Long-term, USDJPY remains broadly contained within its established 140 to 158 range, reflecting a balance of underlying forces. A sustained and significant break above the multi-year 158.00 to 161.00 major resistance, perhaps a 30% likelihood in the coming months, would necessitate a powerful, consistent widening of the US-Japan interest rate differential, profoundly reinforcing the weakening JPY narrative. However, a long-term bearish break below 140.00, estimated at a 20% likelihood, would most likely be contingent on a substantial shift in the Bank of Japan's monetary policy towards tightening, or a severe global risk-off event that significantly boosts demand for the safe haven yen. Always remember to keep a vigilant eye on upcoming economic releases, especially US CPI and NFP figures, as well as statements from both the Federal Reserve and the Bank of Japan. These will serve as the primary catalysts for future significant price action. That wraps up our detailed analysis of USDJPY for today, July 28, 2025. Remember to subscribe to Explain the Charts for more in-depth market breakdowns and real-time insights.